All right, traders, it is the evening of the 8th of February, 2018. I got a request from Carl to take a look and do a chart review of Boston Beer here of SAM, S-A-M. So let's orient you to the bottom. This is a daily chart, not the upper left of the chart here is a weekly vertical bar chart. And then we have a 2-block size Renko-based chart on the right-hand side. So first, let's go ahead and start at the upper left and look at the weekly chart. And I can see that the current trend here is bullish. So the bias is that you want to buy appropriate lower risk entries so that you can participate in this current weekly bull trend. Now, to identify the lows sometimes is challenging. But I essentially want to find areas that we didn't have a good technical retracement that might be extended, and that's kind of where I'll draw my my Fibonacci retracements. So first we can see that there's a nice rally right through here, and then we pull back. So if I just start the lows and I do the highs, so you can kind of see, you know, here, we can see that as price has rallied, we pulled back into the 50% retracement of this bullish session. So I think that that's an adequate number of selling, amount of selling. That's a good technical pullback. It maintains that 50% retracement and then it rallies higher. Now, if we adjust this briefly and we do the next up wave, I'm going to readjust this. We can see from the low of the bull flag here and from the highs that price has rallied and they only pulled back to a 38.2 retracement. So that's not a deep enough pullback for me to say that that there's an adequate resting period. So that's a little overextended. So then prices then continue their rally, and now we're getting a pullback. So I'm going to use the bottom of this breakout, this previous breakout, to this all-time high. So this is going to be our primary Fibonacci. This will be our secondary, or actually, this one will be obsolete. I'll do another one here in a moment. So this will be our primary. Our primary will be the lows, and then here's our all-time highs. All right, so the primary is the low here to the all-time highs. So it looks like the 61.8 also trades into the current point of control for this for the amount of data that's showing there. Now this is again the primary Fibonacci retracement. If we look at the secondary, so if we go from the lows here to the high, we're currently breaking down. So we're looking for areas of support. And it looks like the next area that would be a good technical entry for a long would be at 164.50. That's also, you know, where we had this kind of consolidation area. So we had some profit taking. We found some buyers. We found an established level of support here at 164. I anticipate that if prices continue on the weekly chart into that zone, it would likely find some buyers, kind of consolidate and likely retest highs and continue this ongoing bull trend. Now let's look at it on a daily chart. So now we're on the bottom of the actual chart that's here, and let's see if I can make this a little bit bigger. So here's this this bull flag that's here. This is where we had that Fibonacci retracement that only reverted back to the 38.2% retracement before it broke out, back tested, and rallied. Now we can also see that we recently lost the current angle of advance of the that bull trend here in the daily chart. You can also appreciate here on the weekly, but on the daily we really can see that we lost it, and then as we lost it we rallied and we confirmed this level of support here as resistance, and then we broke down. Additionally, that low that was there, we broke down, we lost it, and then today we confirmed it as resistance, and then we closed out low, so it suggests that we may break down. Now, if I take some horizontal point and figure price projections, the amount of time spent in consolidation here actually supports a bearish 164 price objective. So the amount of time spent in distribution here, and I'm saying distribution just because when it's difficult to actually say distribution because there's really no selling climax and there's not a lot of supply. So the structure looks distributive, but it really, I think, is just a healthy resting period. It's a healthy pullback, which again gives me increased confidence to suggest, buying the 50% retracement or the 61.8% retracement. But the amount of time spent in consolidation here would support a downside move into the 50% retracement, and that's at 164, which also correlates to the 61.8 of the secondary here, which would be 50% of this primary wave. So if we find some support here after achieving the downside objective of 164, that's also the 50% retracement from the lows to all-time highs here, and that's some good bullish technical strength. So if we can maintain that level, that would suggest that the ongoing bull trend would continue and would be a lower risk entry to put your money to work. If we break down and we lose 164 and we trade into 161, and then we rally and then we lose this 164, we lose a 50% retracement, then I would assume that the current downtrend would continue, and there would always be the potential to retest lows. So I don't see that quite happening. If we look at a Renko chart, this is a 2-block based Renko chart, and I'm going to zoom in. We're on the upper right hand side of the screen here, and I'm bringing it up because we can see that Renko is a trend-based system, and it's currently trading lower. And we can see that the 8-day is actually trading now below the 13-day exponential moving average. So we're getting some trend acceptance of the moving averages to say that the current downtrend is gaining some speed. The 20-day is actually starting to decline as well. Now, I'm just trying to pull up some more data. See if I can find where a good point of control is, or where value's at. So if we just take in some more data that's here, we can see also around 170s where we have some good volume profiles. So I would anticipate that prices would at least continue to break down into this 170 area, and there's some good structural support here in the volume profile that suggests that we would bounce. If we look at the volume associated with the Renko, we can see there's a huge volume spike that's here, and that was associated with this rebound off this low. And that's actually, if we look on the right-hand chart where my mouse is, and then you look over to the left-hand chart, you can see where the crosshairs are linking on there. This high volume session actually occurred right here in this doji where there's some indecision on the actual weekly chart. So that's actually some distribution, some selling in the strength. There's your short-term selling climax. And then as the Renko continued, you can appreciate on the following bars, there's no participation, there's no demand. And then we break down, and we break down actually with expanding with a little bit more supply. So there's some selling in the strength, a little bit of supply, and then prices break down. I would note that there's not a lot of supply as prices are starting to trend. So that kind of, again, is just kind of sympathetic to the market pulling back. And I would expect that there's some pretty good potential that after achieving the downside objective of 164, that we start to find some support here around the 50% or the 61.8, around 163, 164, maybe as low as 155. So those are my thoughts on building a position and trying to build a long position while the market's pulling back, and Boston Beer is also experiencing a little counter trend presently. Hope you found that helpful. Good luck.